Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Al Rajhi Bank, Malaysia. Now, David Kuo, founder of the Smart Investor out of Singapore, is our guest today. David, good afternoon.
Selamat tengah hari, Brian.
Now, David, before we get your insights, let's take a look at how cryptocurrencies have performed and also how regional markets have performed in the first half of the day. We start with Bitcoin, which is at 43,522. It's up 0.23%. Ethereum is at 3,256.14. It's up 1.49%. Across the regional stock markets, we start close to home with the SGX Straits Times Index, which is at 377.97. It's down 0.77%. Now, across the region, we've got the KLSE, which is at 1,604.7. It's up 0.24%. Shanghai is at 3,237.31. It's up 0.01%. The ASX All Ordinaries, it's at 7,768. It's up 0.43%. The Nikkei is at 26,917.5. It's up 0.11%. The Hang Seng is at 21,706.5. It's down 0.49%. And rounding up the numbers is the Kospi, which is at 2,693.88. It's down 0.05%. Now, David, what's your view on market performance for the first half of the day?
I tell you what, Brian, I think everybody, including myself, is trying to figure out what exactly is the Fed going to do. What we saw yesterday on Wall Street was the stock markets were down initially, and then there was this turnaround towards the close of the day, and it started moving back up again. And I think people are very confused at the moment because we had some meetings from the Fed meeting on interest rates, and Jay Powell said it was very likely that the Federal Reserve would move fast and furious on interest rates and quantitative tightening. I tell you what, Brian, I look at Jay Powell and I can't really sort of see Vin Diesel and Jason Statham there. Fast and furious joke for me as far as Jay Powell is concerned, especially when you sort of see what is also happening in terms of the Senate yesterday talking about removing the most favorable status on Russia. I mean, that is going to be very inflationary. And as far as the Fed is concerned, it's got this inflation to worry about. It's got the slowdown in the economy to worry about. So which side is it going to actually fall on? Is it going to try and control inflation, or is it going to try and stop the US economy from going into reverse, Brian?
But what is the general consensus among institutional investors? Is the slant towards more towards containing inflation, or the looming threat of a recession because of the inverted yield curve and rising Treasury rates?
It is really quite confusing. You cannot have inflation the way that it is, and the Fed just sort of saying, oh, we're going to move slowly on interest rates. There is so much pressure on the Fed to try and control inflation. But if they do put up those interest rates too quickly, fast and furious, then what is really going to happen is that it is going to cause the US economy to stall. I mean, we saw some pretty good figures coming out yesterday in terms of the unemployment numbers, and it looks like, there is employment going on in the US. So that could be something that the Fed will point to and say, hey, people are going back to work now, so therefore the chances of a recession is not going to be that great. Then you have overlaying on top of that, if prices are going to go up, if things like energy prices, food prices are going to start rising, then of course, you're going to get the workers saying, it's great to go back to work, but I want to be rewarded adequately, because I don't want to go to work and then suddenly find that my paycheck isn't going to be able to cover my fuel costs and my food costs. And so he really has a terrible problem on his hands on what he is going to do. And I tell you what, the market is sort of trying to sort of stare down the Fed and saying, you're not going to cause this economy to stall, which is why probably the stock prices went up yesterday, Brian, because they're saying to the Fed, I don't think you're going to be moving that aggressively on interest rates. And so therefore, I still think the stock market is going to be the place to be.
Okay, David, then, this removal of most favored nation status, and also then obviously curbs on imports of Russian oil and gas. How is that actually going to impact markets in energy?
I think in terms of America, it's not going to have that huge an impact because America doesn't really sort of buy that much stuff from Russia. But I think it is rather symbolic. And what it's saying is that if Russia is going to be removing this most favored nation status for Russia, if America does that, then probably Europe will probably do the same. The G7 nations will do the same. And then if they all remove this most favored nation status for Russia, then of course, it is really going to hurt the Russian economy. It is really going to mean that energy coming out from Russia into Europe is going to cost a lot more. And that goes back to what we were saying, just a few minutes ago. That is going to be very inflationary. That could actually sort of depress global economies, not just the European economies, but the G7 economies as well. And it's going to depress those economies. And that is when it's going to be painful. And I think the other symbol, that America is trying to sort of send across to other countries is that this is what we're going to do to Russia if they don't comply, if they don't play ball and treat another country with respect. And I think it's sending a shot across the bows of China and saying, if you don't play ball, we will remove this most favored nation status for you also. And anything that comes from China into US is not going to have preferential tax treatment. I think it is really America playing hardball now.
That's an interesting thought, something I didn't consider, the signal to China. But David, I want to bring you now closer to home. REITs are a favored investment tool among people who, like yourself, who want stable, good income, and also, of course, capital appreciation to boot. They've not been doing so well lately, especially in the Singapore market. Are REITs still an asset class that we should be putting our money into?
Well, a lot of people like property, Brian, particularly people here in Asia. People like to buy property, but not everybody can go out and buy $1 million, $2 million condo and say, I'm going to rent it out. So the other alternative for them is to try and invest in property through real estate investment trusts. And I think sometimes what people misunderstand about REITs is that they are almost like a kind of bond. When interest rates go up, you would expect, the amount of income that is going to be generated by real estate investment trusts to fall slightly. And so consequently, it is not unusual for the share price to also fall, the unit price for these REITs to fall. But you have to take a long-term view on real estate investment trusts. There will be some good ones, there will be some less good ones. So things like the healthcare REITs, they are particularly good, they are fairly resilient. So what you need to do is to build a portfolio of REITs that includes all kinds of things. Logistics REITs are pretty strong at the moment. There was a time when things like data center REITs were very attractive. Data center REITs are now less attractive than they were previously. But I think what is going to start coming up now is retail REITs, particularly with the reopening of many economies here in Asia, which means that tourism will start to pick up. And so it's not just Singapore REITs. Some of your Malaysian REITs haven't done particularly well either. So don't point the finger at me over here in Singapore and say we're not doing very well. I mean, some of yours over in Malaysia, like Hector REIT, hasn't been that great, but things like Central REIT have. KLCC has been a kind of a mediocre performer. So it's all kinds of things. So what you need to do is to have a good portfolio of REITs that includes all kinds of industry types, and some will do well at some time and some will not do well at other times. But in general, I would say that my REITs are doing okay, Brian.
Now, David, as always, thank you very much for your insights, and thanks for coming on the show.
Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by Al Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Al Rajhi Bank Malaysia's social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.